Hey everyone, Walker Thompson here again with a good friend of mine. We're actually a special guest today to talk about all things accounting related. We have Brad Tafoya. Brad, welcome to our podcast with WhenToManage today.
Thanks, Walker. Glad to do it.
And as everyone knows, the goal here with these discussions with either our customers or thought leaders or anyone willing to talk with us for that matter, is to bring to bear and to put a spotlight on issues in the restaurant retail space, small, medium-sized business space. What are we doing to make operational improvements? What are we doing to increase our revenues, et cetera? So I really wanted Brad to come in today and talk about, I think, a pretty exciting topic, and one that's been talked about a lot in recent election, and that's the tax code, and just taxes in general. In particular, especially when it comes to business investments in technology. I'm sure those looking at WhenToManage as well as other solutions, always looking at technology related solutions and how properly should I invest in those solutions and how is it going to hit my bottom line. As you can see on your screen, though, there is a safe harbor disclaimer here. So we will be talking financial information. So please always consult your financial advisor. Anyway, that being said, Brad, maybe you could talk a little bit more about your business, so everyone knows more than just your name, kind of where you are, and I don't know, give them a sense of Brad here.
Sure, that'd be great. Thanks, Walker. Again, my name's Brad Tafoya. I am a CPA, and I own a tax firm in Durango, Colorado. That's myself and a partner, and we focus on proactive tax planning and financial planning. And so we want to work very closely with our clients and get to know them and the details of their tax and financial lives. And then, as we say, we want to be your financial quarterback. So anything you're thinking about doing, whether it relates to taxes or finances, we want you to be talking to us up front and first so that we can help quarterback you through all the problems that you may see. So that's what we do: tax and financial planning, financial quarterback in a nutshell.
Okay, that's great. Now, I would imagine in the huddle, more. I would imagine a lot of customers are asking more and more about the tax code. I mean, especially with the recent election. If I were in the huddle, and I have been in your huddle, I would imagine that they are as confused as I am. I mean, there's so many weird things going on about the election, taxes, and this and that. I mean, is that what you're seeing?
Yes, people are asking more and more about it. It's been the highlight of the election, and things are very confusing right now. With the election finally over, we have a little more clarity, but not much. What we do know for sure is that the Bush tax cuts expire at the end of 2012. So without action from Congress, what that means is that most ordinary income tax rates will increase. In addition, capital gain rates are scheduled to go up as well. Several business-friendly deductions, like Section 179 expense deduction and bonus depreciation, are also scheduled to go away or decrease substantially. President Obama has said that he wants to solve these issues quickly, that he wants to reach across the aisle. But that may be hard, as Congress is still in a stalemate. There was really no changes there in the House or the Senate. And it appears that both Democrats and Republicans are saying that they're willing to negotiate, but then they always follow that with a but.
Right.
I'm not sure what that means, but as a result, these issues, these expiring tax cuts and whatnot, may not be fixed until 2013. So it makes it hard right now for businesses to plan for year-end purchases and other important things. Our advice is to see your advisor soon and plan based on what the laws are right now, as much as you can.
Because that's probably all the information that anyone has on is to go on right now is right now. I would assume. Well, did you find that those small, medium-sized businesses, and I guess with the economy the way it is right now, are looking for a lot of cost-cutting measures, particularly on the tax financial side? What are you seeing there?
Yeah, I think that this is traditionally the time of year when businesses know a little bit more about their financial results and how their year has gone, and they start looking at ways to reduce costs, and one of those main ways is to reduce their potential tax hits.
Hmm.
I think people got to be a little bit careful. I always remind my clients to be careful and not let taxes be the tail that wags the dog. You'd be surprised at how many folks call me and they're at the car lot, want to buy a new vehicle, and want to know what kind of tax deduction they're going to get. And I always ask them, do you need that vehicle, or if it's a piece of equipment, do you really need it? Don't make a purchase just to save taxes if it's going to put you in the hole in the long run. So again, if there's some things that you think you might need in the first part of 2013, it could make sense to accelerate that purchase into the current year, and a lot of people try to plan that way. Again, with things the way they are now, that planning is even harder because it looks like rates may go up, some of the deductions may go down, and so it's a really hard thing to do. And for the first time in a long time, as CPAs and advisors, we're actually saying that if rates do go up in 2013, this may be a year that you might want to try to accelerate income if you can and defer deductions so that you can pay tax at a lower rate in 2012. You can start to see how complicated this can get.
For sure. It just seems it is something you need to talk to your advisor about ASAP. Well, now, of course, one of the reasons I wanted to speak with you today is to throw the big question on the table. So we're a software as a service company, a subscription model with some upfront professional services fees, and SaaS we've heard goes into the operating budget or goes into maybe the capital budget. I guess it depends, or the capital side of things. So what's your thoughts on businesses writing off SaaS as a business expense, or look at deductions, or what do you think about that? What's coming to your mind, or what are you hearing? What do you recommend?
That's a great question, Walker. And as usual, first I got to throw out the disclaimer. I know you already did that, but I just remind people to always seek the advice of your tax advisor because things can be different based on your independent situation. Having said that, though, in general, a business should be able to write off their software as a service expense as a current operating expense. This is because when a business chooses to utilize software as a service, really what they're doing is they're effectively leasing that software. And so that's no different than if you're leasing your space or leasing any other piece of equipment, and you get to expense those expenses currently. So again, in general, you should be able to write off that expense as an operating expense. On the other hand, if a business buys its software, then the IRS forces you to capitalize that expenditure and typically deduct the cost over 3 years. Now, again, depending on the business-specific situation and the tax laws that are in place at that time, they still may be able to, even though the general law says capitalize this expenditure, you still may be able to write that off in the first year by utilizing either the Section 179 expense deduction or bonus depreciation. And again, those are changing significantly for 2013 in the current laws. And one reminder, one exception to deducting the software as a service currently might be that if the lease of the software is longer than 1 year and the business is using the accrual basis of accounting, well, then they might be forced to capitalize that cost and deduct it over the life of the lease. So again, important to seek the advice of your tax advisor, and hopefully do that before you make your decision, because they can help guide you appropriately whether it makes more sense to lease the software or to buy it or whatnot. So seek their advice before you make your decision, because then it's too late.
Interesting. So, I guess in this conversation, the advice of a counsel or advice of your tax advisor is going to be a big one. And decision-making processes all might fold all into their court with a couple of phone calls or face-to-face meetings or what have you. So, when it comes to best practices, maybe in looking for professional services like a tax advisor, what are you reading, or what do you recommend here when it comes to choosing an advisor or someone that could help out?
Yeah, it's a great question, and I always recommend that people, they interview, just like you would do anything else. That you talk to your friends and your family and find out who they're using, and you interview a couple of tax advisors, a couple of CPAs, and then first of all, you want to make sure that the skills and the experience of your advisor match up with your needs and your goals. As an example, you wouldn't use a sledgehammer to put a nail in the wall to hang a picture any more than you would use a regular hammer to bust up concrete.
You should come to my house.
Yeah. You're using the hammer to bust up concrete?
Exactly.
Anyway, you got to choose an advisor that fits your needs. Some are very good at preparing tax returns and doing that well and not really focusing on the planning, and others do the preparation very well, but also focus on the planning and give you good advice that you can save money with. Again, second, interview several and choose the one that has a good fit for you. For me, it's all about the relationship, and as long as I know the skills and experience is there, then I want to work with somebody that I'm going to get along with and who's going to look after my best interests. And just another caveat, some advisors are very smart, but they're not necessarily good at communicating their advice to their clients. So if you can't understand them, then what good are they? And so having those initial interviews and asking them some questions and making sure you're able to understand what they're saying, I think is critical. And then from there, again, just choose the one that fits you best.
What are you what are you reading these days insofar as this space concerns? Are you just reading are you just going to C-SPAN and watching the political debate continue on? You got any recommendations for good reads on maybe financial planning, business planning? Anything that strikes you there?
Nothing off the top of my mind. I get, as a CPA, I get daily updates on what's happening with financial planning and tax laws that are driven to specifically to CPAs, and so that's typically where I get a lot of my stuff. But there are obviously some good trade journals and websites out there that talk about this stuff, and I think if you Google what you're interested in and check it out, just be a little bit careful about what you're reading and where it's coming from. There's a lot of stuff out there in this day and age that is not fact and in fact is fiction. So again, if you read something, always don't take it for truth. Always run it against your advisors, whoever they may be.
You got to circle right back to your advisor to print it out and say, "Is this right?" Well said.
Yeah.
Well said.
Yeah, there's been plenty of times, even recently with the election, I've got phone calls and emails about, I read this or I saw this, and is this the case? And again, our elected officials sometimes stretch the truth, and the press doesn't help that at all. So
what?
Always make sure you're talking about the facts.
Sure. Well said. Well, I think we've all had our share of the election. I can only recall that 4-year-old girl crying about Barack Obama and Mitt Romney is, I think, an image for us all. Glad it's over, and hopefully the political junk mail will cease. Well, Brad, it's been a pleasure. I really do appreciate the opportunity to learn more about financial advice, and I know our audience does as well. Obviously, these are big topics, and they are subject to change. So I guess the best advice that you've mentioned is stay on top of it, ask your advisor, and make the decisions with as much information at hand as possible. So thank you very much.
Thank you, Walker. I appreciate it.